Okay, let me share my screen, then we'll get started. Okay, thanks everyone for joining. So today we are going to discuss about the technical analysis, okay, for swing trade, and also we'll cover few strategy for options. Okay, let's get started. Okay, so these are the contents we are going to cover today. Stock market business model. It's basically derived from the casino business model, and the few content already we have discussed in the previous sessions. I'm just going to touch up a few from that. Then our main objective for today's session is pivot analysis and Fibonacci analysis plus options strategies which I derived from those technical setup. Okay, we'll discuss about that. But before that, just want to touch up a few basic stuff. We will not take much time for this because already we have covered all those stuff in previous session. Just want to touch up a few things from that. Okay, so mainly we'll be covering what is the business model of stock market, and it is basically derived from the casino business model. And what are the bullish, bearish in this session, morning star, evening star, candlestick patterns. Then market structure, accumulation distributions, MACD, positive and negative divergence. Then what are the EMA I am using? I am not using any simple moving averages, but mainly I'm using exponential moving averages. What are the moving averages I am using for my charts? Then our main topic starts from pivot analysis um, and importance of previous quarter, monthly and weekly levels. Then we'll come to Fibonacci analysis, 61.8 and 78.6%. These are the main key levels for Fibonacci I'm using for my technical analysis. Then we'll come to option strategy, bull, put spread, and bullish strategies based on all the technical analysis which we'll discuss today. Okay. So, what is the stock market business model? It is basically derived from the casino business model. Okay. How it works is in like this casino model. So there are total how many slots? 38. Okay. So uh, what is the chance of a um, player for winning? It is, if you see the 0 and 00, it belongs to casino. So excluding that, total 18 um, 18 players, like 18 slots will be for players. So 18 divided by 38. So players chance of winning 47.3%. Casino, the 0, 0 and 0, it goes to casino. So total 20 by 38, 52.7%. So what is the age of a casino? 52.7 minus 47.3, 55.4%. Okay, what does it mean? If there is a $1 million bet for casino, then the chances of winning for casino is 5.4%. Okay, that means for $1 million, 54,000 casino can straight away win. Okay, so in Vegas, the casino, how it works, like if there are more number of players playing, then the chances of making money is 5.4%, like $1 million straight away 54,000 casino can make profit. Okay, so like age is 5.4%. From that, they are making still a lot of profit. Stock market age is 50%. Like either you will win the trade or you will lose the trade, right? So probability is 50%. Okay, so probability is 50%. Okay, let's say there are 100 trades. I'm taking 1 hour risk per trade. R could be anything. You can take $1 risk per trade, or you can take $1,000 risk per trade. So that doesn't matter. But I'm just considering 1 hour risk per trade. And when we are taking 1 hour risk, the target will be at least 2 hour. Okay, let's say there are 100 trades, 50 win, 50 lose, profit 50 trades, I'm targeting minimum 2 hour. So it's 100 hour, and let's say 50 losing trades. So minus 50 hour. So what is the net profit? 50 hour. Okay. And stock market success rate is just 5 to 10%. Most of the times, or more than 90%, people will fail because of trading psychology and maybe trading setup and so and so. Okay. With this 5 to 10% success rate, 50% age, still we can make a good profit if we have these setup in place. Like at least 2 hour, we will target to risk 1 hour. Sometimes what will happen, we are risking maybe 4, 5, 10 hours, and we are targeting 1, 2 hours. That will not be working out much, because we are risking so much to gain just little. Okay. So based on this casino business model, it's very much recommended for a successful trade setup. If we are taking 1 hour risk per trade, at least minimum we should target 2 hour outcome from that particular trade. Okay, so based on that business model, if we have 50% edge, like either we'll win or lose the trade, 50% edge, still we can make a very good decent profit if we at least follow this business model. Okay, let's move on to the next slide. Okay, so we'll discuss about some candlestick patterns, moving averages, and then slowly we'll start talking about these pivot levels and Fibonacci analysis. Okay, so here we see like candles, if it is going up, let's say for long trend, a long uptrend, uh, if it is going up with increasing volume, that means the trend is intact. Okay, there is no anomaly, and price is going up with increasing volume. Okay, which will support the uptrend. There are if you see the candle, it is like while going up with increasing volume, the candle spread also it's increasing. Okay, rising spread with increasing volume. Okay, and for downtrend also, it is going down with increasing volume, so there is no anomaly. Like this is a, you can consider that is pure uptrend, you can consider that is downtrend. Okay, and in this kind of pattern, it's likely to sell off more because volume is supporting the price action. If price is going down with a decreasing volume, that means it's an anomaly. Like price going down, but the volume is not supporting the price action for downside move. There is a high possibility price might change at any point of time. Here also, like uptrend, let's say if it is going up with decreasing volume, that means there is something wrong. Okay, price directions might change at any point of time. Okay, like this one, price is going up. Okay, but the volume is not supporting the price actions. Okay, so it's purely an anomaly, and there is a high possibility price might reverse at any point of time. Okay, because the volume, it's not supporting, it's not in line with the price actions. Price going up, but the volume, it's clearly indicating that they're not supporting much for this uptrend. It might change the directions at any point of time. For downtrend also, same, it's going down with decreasing volume. Again, it's an anomaly. So if the volume, it's not in line, not in agreement with the price moving down, so it might change at any point of time. So these are the very basic um, technical analysis which we follow while analyzing the chart. Okay, so now come to accumulation phase, and we'll discuss about the distribution phase. So in accumulation, what happens when a price drop and it's just consolidating, moving sideways? That is called an accumulation phase. Here, what you will see, when the price come down a little bit to a support line, market makers, they will start adding. And now the question is why they're not adding all together. The reason is, if they are adding, and market makers, they are placing orders for millions, billions of dollars. They are not a retailer, right? So if they add here, like if they place order for few $1 billion, then price immediately will go up. And they cannot add in one trade. Like it's a huge orders, market orders, right? So they will split up and they will add in multiple chunk. That is how the market makers does. If they place orders here, then all the orders may not get executed and price will shoot up, and they will not be able to add the remaining. So what they does usually, they will place some order here, price will go up, they will wait for some time, little bit pullback, they will add again, they will add again, like that. Once all their orders will get completed, in this breakout you will see a lot of news events. Okay, in this accumulation phase, most likely you will not see any news event. These are all manipulated actions. So this breakout, you will see a lot of news events. Market makers will wait for their inventory to get full. Once all the orders will get executed, once they are done with their job, then you will see a lot of promotions, lot of promotions, news events, and this breakout will happen and price will start going up. So that is the accumulation phase. Okay, so once and again, I'm not talking about for stocks like AMC, GME, or pump and dump. Okay, so those are all can behave anything. So I'm not completely talking about that, but I'm talking about a good quality stocks and in general how it works. Okay, so once in the accumulation phase, you will see a lot of consolidations happening, and this kind of spike you will see that we have seen for multiple, like in our chat group we have discussed many times, right? Accumulation phase, it might break out. So, and one more characteristics of the accumulation phase is you might see it's creating some kind of rounding bottom pattern. Okay, and the accumulation phase, there is no timeline how long it will last. It might be few days, few weeks, or few months, or maybe even few years. Okay, so it's very difficult to decide when it will, like what will be the time frame for the accumulation phase. So, but we can enter in the accumulation phase and wait a long, else we can wait for this breakout, enter and ride the momentum. Okay, that is up to us how we are going to have the trade plan. If you are looking for a long-term investment, add it here, wait for some time, breakout. You can add further once it will break out, and then you will just ride the momentum. This is the accumulation phase. Okay, I have some kind of like captured from different books, so you can just go through that. Now this is the distribution phase. In distribution phase, what happens when price will go up so much, it will just consolidate. Okay, and again, market makers will not close their inventory in one shot. Okay, they will, what they will do, they will just short once it will shoot up, again wait for pullback, another pullback, they will add it here, wait for pullback, add it here. Once they're done with their job, here you will see breakout along with a lot of news events. Lots of negative news will come up. That is how they manipulate the market. They will not have any kind of news events there. They will, sorry, they will not have any kind of news events here, because still they want to close their positions, and again they will be trading with large size, right? Millions and billions of orders. So they will just take some time, close their orders. And can others go on mute, whoever is not talking? uh, okay, so they will not close all their positions in one shot. They will just take some time for the distribution phase. Once it will go up, they will just add to the short positions. Once they're done, break down a lot of news events and price will start going down. And these are the characteristics, like it will move sideways and again rounding top pattern it will create, and you will see a lot of spike whenever price is going up, and those are all selling pressures. That is how the distribution works. Okay, and campaign starts here. Here somewhere it will be accumulation phase. Then campaign means there are a lot of news events, promotions, a lot of like news will come up, which will eventually add a lot of retailers to ride this momentum, or intraday traders or scalpers. They will add to their positions here. They will ride the momentum. Once they are done, distribution phase, market makers, they will start adding to their short positions, price will go down. That is how it works. Okay, and yeah, so this is a distribution phase. Like it will go up, and you will see this spike in the resistance level. So this is a resistance level. Once it will go up, people will start shorting it here. Again, shorting it here. And once they are done with their job, price will go down along with a lot of events, news events, and all. Okay, and you will see this kind of volume spike. Okay, so similar for accumulation phase, a lot of rejections, I would say. Once it is coming down to this level, you will see a lot of rejections in the support level with volume spike, and it will continue for quite some time. There is no specific timeline. Okay, so it's not like days, weeks, or months, it could be anything, and it's very difficult to decide what will be the timeline. But you can easily figure it out once it will break out from these resistance level. You can, like in the breakout, I'll just give you one more thing. Like if it breaks out, it's not like it will move in straight line. Okay, the if you like analyze any chart, you will see this breakout slightly come down to this support level. Okay, it will take support in this support zone, and then it will break out. So if you miss this entry, just wait for this small pullback to a support zone, enter here, ride the momentum. Okay, so if you see any like and it's same for accumulation and distribution, both it kind of characteristics we have observed. So that is how it works. Okay, so if we combine this accumulation and distribution, it looks like in the accumulation phase, once a campaign like once their inventory is full, breakout, there will be a lot of buying climax will be here. Retailers will start taking their positions, or momentum traders, scalpers, and there will be a test. This test is like low volume test. Once it will go up, it will slide, come back down to the support zone, then it will start moving up. Okay, once it will go up, distribution phase, market makers, they will start their closing, start to close their positions, then news events, then again start going back down. Okay, so these combinations of accumulation distribution phase, here you will see a lot of buying climax, and here you will see a lot of selling climax. Okay, and in chart, like if you see this one, like accumulation or consolidation phase, what happens once it will start going back down, here you will see some kind of spike with very large volume. Okay, this is called stopping out volume. Okay, that signifies that trend is going to change. It not necessarily it will change immediately, but there is a possibility it might go down further, consolidate, break out, and start moving up. Okay, so this kind of volume, okay, called stopping out volume. Okay, this signifies some kind of trend reversal is going to happen. Okay, and this is kind of small accumulation phase happen. Then you will see these are all buying climax. Okay, once it is coming back down, creating some kind of rejections, then breakout and start moving up, and before moving up, it will just pull back little bit. It will do a low volume test. This is called low volume pullback with a low volume test, then it will start going back up. Okay, and you will see like kind of solid candle where it is a clearly buying climax, like open and close without any wicks. That clearly signifies there is a lot of buying pressure. Okay, and once it will go up, some kind of consolidations, then again it will create a selling pressure. Okay, um, okay, so before moving to next slide, do we have any questions, or are we good?
Hey, Sudhir, so that we just connect with you, can you give more information about your background and how do you learn all this? It's great. Wow.
That reading multiple books, and I have enrolled for multiple training sessions. So
Okay.
attended a lot of training. So that is how I learned. And I am
Okay.
into stock market almost more than 15 years.
Um, Sulipta, this chart you're showing, this volume, is it like a weekly or? like a
Okay,
daily?
let's do not talk about the time frame. It could be daily, it could be weekly, it could be monthly. But what I'm talking about is this accumulation and distribution phase. You can see in any time frame. It could be
Okay.
for daily, for intraday, it could be for weekly chart, monthly chart, anything. So
So
let's
it's applicable for all the
it is
timeline.
applicable for all the time frame, but what I mean to say is how it works, accumulation distribution phase. So it could be applicable for any time frame. So that is why I have not mentioned time frame at all. Okay, you can see these kind of patterns in intraday trading as well.
Got it.
Okay, fine. Let's move on to the next slide. Okay, again, these are all very basic charting pattern. So this is a morning star. What happens? You will see red candle, then small green candle, and then again green candle. So this kind of pattern, it's called morning star. So this is likely to reversal of downtrend. Okay, and this is the evening star. Like you will see a green candle, then here it could be green candle or maybe red candle, indecision candle. Here also you might see some kind of indecision candle, then reversal, red candle, then start going down. So this is evening star, and not only morning star, evening star. There are n number of charting patterns. Okay, you can refer any technical analysis book. You can learn all those. Charting patterns. So I've just included one, and there are many. So okay, so you can just go through any basic technical analysis book. You will see a lot of this chart pattern. Okay, so let's talk about MACD. I'm not using it much, but it's good to know how it works. Okay, this MACD you can use in any time frame. Here I captured from daily time frame. You can use it for 1 hour chart, 4 hours, 6 hours, or anything weekly, monthly, and 12 hours, 24 hours chart. You can use MACD and you can just do some kind of research. How it works, MACD? Here, once it is like price going down, then you will see this MACD, it's crossing above zero line. It could be a good entry point. When it is crossing above zero line, you can see this crossover. Okay, and you can easily write the momentum. Once it is going down, then it is not recommended to add anything here. Okay, wait for pullback. Wait for pullback. Once it is crossing above zero line, you can add further here. Okay, this is called positive divergence. It came back down, went back up, came back down, but this downside is much higher low than this downside. This is called positive divergence. Once you will see this positive divergence, again, I'm not talking about time frame. It could be any time frame. You just do some kind of research in lower time frame, 1 hour, 4 hours chart, or any time frame. You will see this kind of pattern. That could be a positive divergence. But the difference is if you refer 1 minute chart, 5 minute chart, then you will see a lot of noise. If you refer 4 hours, 12 hours, 24 hours chart, or daily chart, weekly chart, noise will get filtered out. Okay, you will get more clear signal. This is a positive divergence, as I mentioned. This is a negative divergence. Came back down, went back up, again coming back down so much. This is creating a lower low, okay, than this one. It is a negative divergence. Once it is happening, there is a high possibility price might go down further. You can take entry once it is above zero line. Okay, you take entry here above zero line, you take entry here above zero line, so and so. You can like plan your trade accordingly based on the positive and negative divergence, or once it is going above zero line, or you can close your positions or maybe wait for pullback. Once it is going above zero line, you can take entry further, and this is a one signal that price is going to reverse. Okay, this positive crossover. Okay.
Hey, Sudipta,
Next,
is
yeah.
MACD divergence different than the RSI divergence?
Sorry, tell me once again. MACD and
Is
RSI.
is yeah, MACD versus RSI divergence. Is that two different?
RSI represents whether price is trading at like whether price is undervalued or overvalued. Okay.
Right.
But MACD divergence, it can clearly signifies the reversal of trend. RSI might be similar to such extent. I have not explored that. You can check it up. But RSI mainly we are using to check whether the price is trading below the, like, undervalued or overvalued. That's it. That is the main purpose of RSI. Okay. If it is like 70, 80 or above, it is overvalued, overpriced. So it's not trading at fairly priced zone. So we'll expect a sell off. If it is trading at 10, 20, 15, 25, 30, it's quite such extent undervalued. That is how we treat RSI. But RSI divergence mainly we have not used. But for MACD, there is one book called Two Road Divergence written by Dr. Alexander Elder. Refer that book. He has explained nicely for this MACD divergence and all this stuff. Okay, so that's called Two Road Divergence. It's there in Amazon. Nice book. I read long back, so it's good to refer. Okay, let's move on to the next. Most of the charting, like moving averages, I'm using these EMA 8, 21, 34, 55. These are all fib numbers. Okay. And there are multiple ways to calculate the moving averages. You can use high plus close divided by 2, high plus low plus close divided by 3. Or there are multiple ways. Any like platform, they will have multiple options to calculate. What I refer, high plus low plus close divided by 3. There is a standard things I am referring for all my trading, including intraday, including swing, like momentum trading, scalping, everything. I use this 8, 21, 34, 55 EMA, nothing else, plus high plus low plus close divided by 3. That's it. Okay. And I'm using mainly harmonious chart pattern. What does it mean? If price is trading above 8, 21, 34, 55 EMA, and the EMA, like, 55 is trading above 34, 34 is trading above 21, 21 is trading above 8. That is called harmonious chart for long setup. Reverse, it will be for short setup. Let's see next chart. Yep. Here, if you see 8 EMA 21, 34, 55, price is trading above these moving averages. Okay. So this is called harmonious chart for long setup. You can add in any good pullback, and along with that, what I refer is if harmonious chart in daily, weekly and monthly time frame, that is a very strong uptrend. Okay, any pullback, if you see any pullback getting rejections, moving back up, any pullback, rejections, any pullback, rejections, moving back up, and you will see for any kind of pullback, market makers are adding to their positions, moving back up. This is a very strong long setup harmonious chart where 8 is trading above 21, above 34, above 55. Okay, and these moving averages are trading without overlapping each other. Okay, if there is a overlapping, there is a high possibility price might move sideways without any proper directions. I try to avoid that. Okay, this is a strong uptrend, this is a strong downtrend. Here price is moving averages overlapping each other. Do you see any clear directions? It might go any directions. Avoid that completely. If price is like if moving averages are trading without overlapping each other, 8, 21, 34, 55, clear downtrend. You can short, wait for pullback, short again, wait for pullback, here short, short. It's not like you will get exact top or exact bottom. You can, if you short here also, wait for some time, add it to your positions, or if you don't add, still wait for some time, you will get your directions. Okay, but
Are you going to show this in trading view, or what is the indicator for this?
any tool you will see that moving averages, harmonious, moving averages and all these are all very basic things, right? Any trading view also you can, like, they will be having options to add moving averages, and like you can define like 8, 21, 34, 55 and high plus low plus close divided by 3. All these you can define in any charting software.
Any specific indicator that you use?
We'll talk about that, but as of
Okay.
now we have discussed only the moving averages. and harmonious start. Okay.
Mhm.
So we are clear till this, right?
Yes.
Okay. Let's move on to the next. Here also I just taken SPY chart for harmonious chart pattern. You see here, any pullback towards 55 EMA, getting clear rejections, it is still strong uptrend, 8, 21, 34, 55. Any pullback, getting rejections, moving back up. So you can utilize these for any kind of pullback and ride the momentum. Okay. And if you see 8, 21, 34, 55, it's moving clearly, moving up without touching each other, no crossover, no overlapping. So it's clear uptrend. Okay. Again, same for long chart pattern, harmonious chart, moving up with 8, 21, 34, 55 without touching each other. Okay, so till this we have covered very basic stuff. I hope we don't have any queries, right? So we can move on to the pivot analysis now. Are we good till this?
Yes.
Okay. Now that is the main objective of today's session. I'm going to talk about previous quarter high, low and close, previous month high, low and close, and previous week high, low and close. Okay. These are all derived from the pivot strategy and what is the importance of that, how we can construct a trade. All this we'll discuss now. Okay. Mainly I'm referring pivot analysis. Okay. So in my chart, I'm using previous quarter high, low and close, previous month high, low and close, previous week high, low and close. I'm not talking about current month, current week, current quarter. I am completely talking about previous quarter high, low and close, month and week. Okay. So this line, its previous quarter close, previous quarter high, and previous quarter low could be below. I have not captured here, but again, we'll talk about that in detail when I'll show you the chart in Thinkorswim. Okay, so what is the importance of that? These levels could act as very strong resistance or support. When price is moving above that, we will expect retracement towards that level, act as very strong support, get rejected, provide a buying opportunity, move straight away from that. Here, if you see, here came back down, strong rejections, move up, came back down, strong rejections, just one candle rejections, sharp rejections. That means when it came back down, market makers know it's a buying opportunity. They have added to their positions, sharp rejections, solid move, came back down, previous quarter high, solid rejections, not much consolidations here, then strong move up, then did not came back towards this level, strong move up. That is the importance of previous quarter high, previous quarter close, and previous quarter low also we'll see later. Okay. This one, again, I captured previous quarter low, previous quarter close, previous quarter high. It just consolidated for some time, came back, rejections, then straight move away from that. Okay. I captured, this is a 4-hour chart. Okay. This is if you are adding it here, first and easy target could be previous quarter high. If you are adding at close to 317 or let's say 320, 330, your target could be 360 or 370. It is a very easy target. Okay. And if it is a consolidating here, just add with multiple chunks. Wait patiently. First target would be here. If still going up further, you can look for other Fibonacci levels or other pivot level. So we'll discuss in detail when I'll show you in chart and how we will come to know whether it will further move up or not. Two scenarios: price moving up, cross above that, moving averages still below, this previous quarter high, there is a high possibility price will lose momentum. If price has to break out, it cannot break out alone. It has to break out along with moving average. Here it happened. Price went up along with moving averages. Short, all the moving averages move up. Definitely, if you take entry above, still you can ride the momentum to such extent. Okay. If price is moving up without moving averages, eventually it will lose momentum. It will provide a pullback. Price has to move up, break out along with moving averages. That is mandatory, not optional, in order for further upside move. Okay. Here, if you see, this is a weekly pivot levels captured from SPY. It is, I believe, it could be latest, not very old chart. So came back down, clear rejections in the previous, not previous, weekly, previous week pivot levels, move back up, came back down. This one is previous week low, previous week close, previous week high. Yeah, it's a recent chart. So I was expecting it will hold this support level, move back up, but eventually it dropped below that, but clear rejections at previous week low, exactly rejected at previous week low. This is a previous week low. Okay, rejected at previous week low, then move back up. If you are entering here or somewhere here, you can easily look for this previous week close or previous week high as a target. Okay. Here if you see, this is Nvidia. This one is previous month low, came back down, small consolidations around that. This is again weekly pivot levels, rejections here. If you are entering somewhere here, you can look for two opportunities like as a target. First target will be previous month close, second target could be previous month high. If you are entering here somewhere or here, here it's bit choppy that we can easily clearly see this kind of spike, but it moved towards previous month high. So my objective is to show you what is the importance of these levels. This is previous month low, clear rejections, move towards previous month close. From there it sharp move towards previous month high. This is a previous month high. Okay, exactly rejected at previous month high. Okay, so that is the importance of these levels. It's not necessary you'll be putting your sell order exactly at 184.55. You can sell it from 170, 165, or maybe 180, 180 to 183, likewise with multiple partials. Okay, but this is a high probability trade setup. If you are entering it here, you can look for first target, you can look for second target here. Okay, option strategy. No, are we good till this? Now I will discuss more detail in think or swing. Any questions till this, or we are good?
Sudipta, these levels work with the volume as well. Like the previous chart you explained regarding the volume going up and down. So
It works with the volume, but this pivot strategy, volume is not projected here. Rather, what it does here, once it is in consolidation phase, we will see this is called compressions. If this pink color lines, right, this is called compressions, which is nothing but a kind of accumulations or distributions. When you will see these compressions, there is a high probability it will provide expansion. Okay, so once you will see these compressions in the accumulation phase, likely to provide expansions. Once you will see distribution phase, again you will see kind of compressions and likely to provide expansion towards downside. Volume I'm not using it here, but you can definitely refer the volume. Okay, volume I am using for different charts, but not, I have not combined with pivot analysis. Like this purely I'm just referring previous quarter, previous week, previous month, high, low and close, pivot levels, along with this is called ADR, advanced data range, along with this compression and expansion I'm using. Okay,
okay, thank you.
fine, let's
So,
see.
sorry. So there's
Yeah.
the one question. So what is this compression? Like what
Okay,
is this?
compression is nothing but accumulation or distribution. So if you see these purple color lines, not purple, sorry, pink color lines. That means in these you will can you guys go on mute? Okay, so once you will see these pink color lines, that means there is a kind of accumulation or distributions. Price might move sideways for some time, and you will see expansion. Okay, so like Pivot, the owner of Pivot Boss is Mark Ochoa. So how he derived these, that you can like read that book, you will come to know Secret of Pivot Boss. But the objective of this is, if you see this kind of compressions, you can easily expect expansion shortly. Okay, it's like a um, it's like here momentum is getting accumulated. There is a high possibility after these compressions it might provide some kind of expansions. Okay, here some kind of compressions, small compressions here you see, likely to see expansion. And if you see any compressions here in the distribution phase, you might see expansion towards downside. That is how it works.
So when you say compression or this distribution, so in this, it's a kind of sideways movement wherein it's a consolidation phase, and after that, like the movement will happen either up or
Exactly,
down.
yeah, right,
Okay,
you are right.
got it.
So here you see compression. Okay, after that, what happened? Expansion. You see compression. What happened after that? Expansion. That is how it works. Okay.
Got
You
it.
see
Thank
small
you.
compressions. After that, expansion. Okay.
Sure. Thank you.
But
Yeah.
Sudipta, how do you know what the baseline is? What's your baseline here?
Okay, so baseline in the sense you can refer multiple time frames, do a back testing, you will come to know how it works. Okay, and once you will see compression, that doesn't mean easily you will just blindly add full size. Here you see compressions, after that solid drop again for quite some time, few weeks, not sorry, few weeks, 8.1 to 8.5, it just consolidated without any move, then provided expansion. That is how it works. There is no particular baseline that this compression happens for this time frame or this date. After that, you will see breakout. It might last for it's a lower time frame, 4 hours chart. Okay, so it might be for a few days. That is very difficult to decide. So there is no hard and fast rule or like 2 plus 2 equals to 4, nothing like that. So it might move again after compressions. If you see some kind of solid negative news, it might go down as well. Anything can happen in stock market. So there is no hard and first baseline that if you see this pattern 100% is going to work. Yes, there is a high probability. That is why we are telling it's a high probability setup. Nobody can tell 100% it will work like that. Okay, so baseline in the sense you will see, if you see compressions, there is a high probability. If breakout, you will see expansions. It might be for, and again we don't have exact timeline how long it will how long it will move sideways. That probably we have to have patience, wait for some time, add multiple, have multiple averages. Once it will break out, just ride the momentum. That's it.
And in
Okay,
these
but
cases, where do you keep the stop loss per se, Sudipta? How do you determine that?
okay, stop loss, you will like percentage wise, you can decide, or if you see kind of important support level, if you have averages like 214, 215, something like that, you can have stop loss below certain important levels, like this is a fib levels, you can have this one. Or I have not projected the weekly chart. Like here, if you see, if I come to this is a weekly chart, right? So if you are entering it here, you can probably have stop loss around this 210 or 211 somewhere, or maybe 1% or 2%, whichever as per your trade plan. Or you can look for some other important support levels where you can put a stop loss. But
What do
momentum
you
trade.
use? Do you use like 2%? Do you use a certain percentage or what do you do?
Okay, so I usually do not use percentage wise. I just look for overall trend and how it is going. If I see it is like no more uptrend, it might break down below that with increasing volume, or moving averages is coming down below. Probably I will reconsider to close my positions. Okay, and there are different ways you can trade. You can put a hard stop below that. Here it's 216, you can put a hard stop here, you can put a hard stop here. Different people will have different risk management and tolerance factor, so it's not again same for everyone, right? So I will prefer to see if the this reversal is broken, I will prefer to close my positions. If I see it's holding these positions moving up, I might add further, or wait for some time for breakout. If it still break down with good volume or moving averages dropping below in the support line, I might close these positions. The reason is, in these rejections exactly at this point, if you see moving average is still trading above this zone, right? So that means there is a possibility price might not drop below. Even let's say tomorrow if price comes to this level, but if moving average is trading above, there is again possibility that it might hold, consolidate, bounce back up. If moving averages drop below the support line, I will reconsider to close my positions. Or maybe somebody will still have more risk tolerance factor. They might wait for this 29 or 210. So different people will have different risk management, and there is no particular one way to trade one stock. Multiple people can trade multiple ways. Okay, it's up to you, up to us how we are going to construct that trade. Okay.
Yeah, I agree, because especially if you look at Oracle and the swings that it has been having, right? It's just difficult to do stop loss on them, right? You'll just
Yeah,
otherwise
that is
have to
why I
pull out.
told. The reason is, if you put a stop loss here, market makers, they will come to know where
Yep.
is your stop loss. They will come back here, they will flash out your stop, it will move back up. Okay, it happens, and that is their favorite game. They just like prefer to flash out the stops and move the price up. Okay, it happens every single day. So that is what they are doing it. That is why I mentioned it's completely up to us how we are going to play. If it drops below along with moving averages, increasing volume, then there's a high possibility it might sell up further along with the overall market, what it's doing, then we can reconsider. Or else, if we do not have so much of time to see what is going on, put a stop loss somewhere below or somewhere below and plan your trade. Okay.
Right.
Are you good?
Yes.
Okay, let's talk about whatever we discussed so far. So this one is previous. Let's show you here. So this one is previous quarter, high, low, and close. I'm using. Okay, this is previous quarter level. Sorry,
What tool is this? Is this TradingView or what is it?
interesting.
Okay.
Okay, so here, if you see, it came back down, not able to hold below previous quarter, uh, close, consolidate, compression, bounce back up, came back, clear rejections at previous quarter close. Your first target could be previous quarter high or other fib levels. So straight move back up, again came back down, consolidate in this zone. Oops, consolidate in this zone. Clear rejections, consolidations, again pull back, clear rejections at previous quarter high. This is just rejections, strong rejections there. If you are missing it here, you can look for opportunity here. Okay, and ride the momentum. Okay, one more thing. Currently I'm using this technique. I think it is called what is that? Let me find out. No. Again, this one has derived by Dr. Alexander Elder. I just trying to remember this charting. Here what it does, it uses three colors: red, blue and green. Red means buying is prohibited. Blue, you can plan for your entry, you can enter, but good entry will be when the candlestick changes from blue to green. Okay, here blue to green, you can look for entry. Blue to green, look for entry. Okay, here you will not see any green. Do you see that? No. Here you will see green. Okay, you can look for entry. Here you will see green, look for entry. Okay, so that is how he derived. Again, it's derived by Dr. Alexander Elder, and you will see this one in Thinkorswim or many other platform. It's there. Okay. Yeah, so I was talking about these levels, right? So it came back down. You see clear rejections here. take for entry somewhere green or consolidations, and you can easily ride the momentum. Okay, and here this is a 6 hours chart. Okay, 6 hours chart and 4 hours chart. I'm a lower time frame I'm checking. Similarly, you see the rejections here. You came back down, but this is a fib level, 23.6% level. It rejected. We'll discuss about Fibonacci strategy later. Just hold on for some time. Came back, rejections here, move back up. And if you see go a little higher time frame. What is that? 12. Yeah, 12 hours chart and 24 hours chart. Okay, so here you see uh, came back, rejections. This is a previous quarter close, previous quarter close, moving back up. Okay, and here also consolidations little bit, came back down, rejections, strong move back up. See the rejections, just one solid candle in the previous quarter close and just sharp move back up. If you see this kind of rejections, you can take entry when a price will move above this candle high. Okay, it's a good strategy. I'll show you. Here rejections one, right? So this is a previous candle high. Like I'm talking previous candle means with respect to this candle. Okay, if you take entry just above, still you can ride the momentum. Again, it's a scalping strategy. Okay, once it will get rejected here, and you will, if you see once it will start moving above these candle high, you can take entry here. You can take entry here and you can look for kind of scalping opportunity. Okay, here see rejections, right? Rejections. If price start moving above these 221, above this 221.56, you can take an entry here and you can ride the momentum. But here if you see in the downtrend, this is high. Next candle, is it creating new high? No. Is it creating new high? No. Is it creating new high? No. But red to blue, if it is creating any green candle, creating above, moving above previous candle high, that will be a clear buy opportunity. Here, let's say you are entering it here. Okay, entering it here, you can ride the momentum. After that, inside candle coming back down, it's not a good time to enter here. Rejections, is it creating new high? Yes, this candle creating new high, you can easily enter here, ride the momentum. Okay, now coming back down, this is again previous quarter high. Rejections, is it creating new high? No. Here creating new high, yes, it's creating new high, enter here. Okay, previous quarter high, rejections, enter here, ride the momentum. And again, that doesn't mean that if you ride the momentum you will get 10, 20, 30, 40 points up. No, I'm talking about scalping opportunity. Okay, if you ride the momentum here, you just plan your trade. It's very difficult to decide which how far it can go, but I'm just telling the entry point. Use your stop loss 1 or 2 hours. If you can capture, move your stop loss to a break even, fair enough for scalping opportunity. Came back down, clear rejections, creating a new high, enter here, you can ride the momentum. Okay, that is how, like if you enter here at least 229, 229 to 230, 235, 237, it's pretty good move. Okay, if you're trading with options, $1, $2 also will give you a very decent profit. Okay, let's we have discussed about previous quarter. Let's talk about I'll show you one more SPY. See here, SPY came back down. This is a previous quarter close, previous quarter high. See the rejections. It's a sharp, exactly rejected at this level. Exactly rejected at this level. Okay, it's clear rejections and it's crazy entry. Came back down. Don't take any entry here. Red, buying is prohibited. Blue, enter here. Above, moving. Oops. Take entry here, ride the momentum. Okay, came back down, 55 EMA rejections. You can easily at least capture some move. Okay, again rejection. These are all pivot levels. Okay, rejected at pivot levels. Okay, now see this one. This is a previous month. I'll show you. This is the previous month, high, low, and close. Okay, came back down. See the rejections. Previous month, close, rejected. Okay, you can take entry at previous month. This candle high and write the momentum. Now, let's say there could be two scenarios. Price is going up, moving average here just went back up little bit and start pulling back down. That means price eventually will lose momentum. Okay, here price is going up along with moving averages. High probability price will move up further. If you take any entry here, your first target will be this one. Like here above this one, you are taking entry for 650. Your first target is 657, 7 points move. It's a lot for options trading. It's really a lot. Okay, if you are taking any entry here, if price is moving above these weekly pivot level, your first target will be here. Like if you're taking any entry here, what is that, 659 to 654, 4-5 points move, fair enough for scalping. Came back down, clear rejections at weekly pivot levels, enter here. Your first target will be here. If move up further, you can plan your trade. Came back down, rejections, red, buying is prohibited, moving above. Like if it is creating new high. But if you see this downtrend, let's talk about this downtrend. Is it creating new high? No. Here new high? No. Here new high? No. But here downtrend is broken. It's creating new high. Rejections in the previous weekly pivot levels. This is clear double rejections where it came back down, rejections, came back down, rejections. Here not able to create new low. Downtrend is broken, creating new high. Enter here and you can ride the momentum till this. Okay, first target. It might move further up, that is the second thing, secondary stuff, but at least you can take an entry when the downtrend is broken. See the clear rejections here, enter here, ride the momentum.
Hey, Sudipta, I'm on Thinkorswim platform. I cannot find your indicator.
You
How
will
do you?
not find out. You will not find out. That we'll talk about later. This is a pivot strategy. I'll share it later. Just now, just focus on whatever we are discussing. Okay. We have another 30 minutes to wrap up. So these indicators and all I'll share. But for now, I just want to cover how it works and what will be the trading strategy. What is the entry point? Okay. So this one is previous quarter, high, low, and close. Previous week, high, low, and close. You can refer previous month as well. This is previous month, I believe. Let me see. This is previous month, right? Yeah, this is previous month. Okay, so this is a previous week. Here, little bit consolidations in previous.
How do you know it's previous week?
Not previous week. This is the previous quarter. Okay, how I do know? Here it's a big line I have given. Okay, this is previous quarter. This is a small one. Previous month. Okay, this is a 12 hours time frame. In this time frame, I have added only two. Previous quarter, high, low, and close. Previous month, high, low, and close. 4 hours and 6 hours chart. I am using previous quarter, high, low, and close. Previous week, high, low, and close. So I know very well what time frame and what will be. So this is previous quarter close. I'll show you previous quarter close, and this is previous month high and low. Previous month high, low, and close. Okay. So here clear rejections here. You see. This is a solid clear rejections. Okay, take an entry here. You can target for this one. Again, that doesn't mean that if you enter here and straight away it will move here. It might provide some pullback. It's very difficult to decide. It might come to this and retest, or it might take this support line. Anything can happen. Okay, it might take that as a support line. Okay, it might come back down further, come here, retest and move back up. Anything can happen. But good entry point will be here. Take an entry. You can ride the momentum. Came back down. This is a weekly. Pivot levels. Okay. These are weekly pivot levels. Clear rejections here. See multiple. I'll zoom out. See the rejections here. Downtrend, continuous downtrend. This is a inside day, not inside day, inside candle, not able to create new low. Red to blue, it's turning. You can take an entry here. You might add further here and ride the momentum here. Second, two scenarios, two probabilities. Either it might go up, provide pullback if moving average is unable to cross above this line. Second probability, price is going up along with moving averages. You can add further here because price is moving up, price is moving up along with moving averages breaking out this line. There is a high probability it might move up further. You can use this line targets. These are all ADR, okay, weekly levels for target. You can easily use this for target, book profit in these levels, okay. That is how it works.
But Sudipta, let's say if I'm doing intraday, so do you look at the daily versus weekly? Does it depend on how long you plan to stick to the position?
Intraday, I do not prefer weekly, monthly, and this
So,
type of charting. Intraday is completely different game plan. I'm not going to discuss about anything right now because today's session I have scheduled for technical analysis, swing trade, scalping, momentum trade options. Intraday is completely a different game plan. We do not discuss anything, like we do not consider anything in intraday for this kind of, because intraday is uh, everything should be predefined. We know how it works. We just very few seconds will take to think and write the momentum, take an entry. It's again different game plan, so let's not talk about that right now.
so your
uh,
game plan is for how long of a wait? Is it for a weekly trade or a monthly trade or a long term?
Intraday means intraday. You will
I
enter
understand,
and
but with
exit.
the thing that you're showing, what is that for? What time frame is that for?
Okay, so this time frame I'm talking about is momentum trade. Okay, you can enter, exit on the same day if you get the movement, or maybe wait for a few days, few weeks, as soon as the trend is intact and not broken. Okay, this is not for intraday, but this is for swing trade, momentum scalping trade. If you, let's say if you enter here and if you prefer to close on the same day, you have captured a very good move, fair enough, that is up to you. But
Okay.
ultimate objective of this session is to discuss about the technical analysis for entry and exit, and you can utilize this for scalping, momentum trade, swing trade, holding for few days or weeks.
Okay.
Okay.
So even in momentum time trade, do you look at the daily candles first and then you go at the weekly, then you go at a lower time frame? How's your thought
Well,
process?
I'll come to that. I'll come to that. Okay, so up to this is it's clear, right? So what is the importance of weekly, monthly, and daily, high, low, and close? Not daily, sorry. Weekly, monthly, and quarter, high, low, and close, and how we can take a positions. This actually smaller time frame I'm showing because it will give you some kind of granular level informations for your entry point. Okay, this is 4 hours chart. I have shown 6 hours chart. This will give you a little bit granular level. Like if you are looking for momentum trade or scalping, you will try to zoom out and see what is going on inside and what will be my best entry point. That is why I'm using 4 hours and 6 hours chart. Let's talk about daily. This is a daily time frame. Okay, daily time frame here. What is this on Tesla? Let's talk about SPY. Okay, so SPY here, do you know what is that? Previous quarter high, came back down, sharp rejections at previous quarter high, came back down, sharp rejections at previous quarter close. You can take that as an entry point. Your entry point either will be here or break off above high of previous candle. Okay, break off above previous candle high. Sharp rejections, these are all crazy entry point. Okay, this is a daily time frame. Came back down, clear rejections here at previous quarter close and high. Here previous quarter high. You can see that same with any chart. Take any chart, you will see the same. See the rejections, previous quarter close. Okay. Likewise, you can derive your entry here. See the rejections at previous quarter close. You can derive your entry and exit point based on multiple time frame. I prefer to zoom out to see what is going on in 4 hours, 6 hours, 12, 24 hours chart for better entry point. Okay, clear? Okay, we have 20 more minutes. I am going to discuss about Fibonacci strategy now. Okay. Let's talk about Fibonacci strategy. Yeah, trying set. Okay, so Fibonacci, as I mentioned, I usually prefer to use 61.8, 78.6% for better entry point. Okay, oops, sorry. See, and what will be the time length?
Any reason behind that,
Yeah,
Sudipta?
range, that is what I'm talking about. What is that range or time length? Usually prefer to go for 1 week, 1 year, 1.5 years, most, not like 2, 3, 4 years. Doesn't make any sense. If it is providing so much a pullback, or if you're looking for scalping or momentum, that also will derive. But for now, let's say I'm preferring 1.5 years chart. Okay, 1.5 years chart from here. Okay, it went up so much, came back down, exactly rejected at 78.6%. So these two levels, 78.6, 61.8% are crazy levels. There is a super high probability price, if it drops within this range, very high probability it will bounce back. It will not be able to sustain very long time frame, very long time in that zone. See here, clear rejections are 78.6%, red turning to blue, opportunity. You can take any entry above break of these, or somewhere here, and here pullback 61.8% rejections, went back up to 38.2, and again pullback rejections, a strong move back up. Okay, now it's going to a zone where most of the sellers will try to add to their short positions. This is moving up in the air. Price is moving up without moving averages. If price is moving up, if the moving average is crossing above these 23.6%, there is a high probability it might go up further. But as of now, I see a big gap. There is a high probability it might provide pullback at any certain point. That doesn't mean it will provide immediate pullback. It might go up further, creating FOMO run, then get extended so much, provide pullback. Okay, but my objective is to show you what will be our best entry point with respect to Fibonacci levels. Okay.
These levels would move if you change the timeline to 5 years per se, or 1 year.
Usually, yeah, you can. Like this is a monthly chart I'm using. Okay, and you can plot from here also. That is up to you. But I do not prefer to use 5, 10 years time frame. It will not give you clear picture. But at least 1, 2.5 years is fair enough to derive good strategy for entry point. Okay, if I use monthly chart, you see this candle is a wide, gigantic candle, and it requires a pullback. And here came back down, then clear rejections at 78.6% and move back up. Okay, and you see UNH. Okay, oh, sorry. Okay, UNH, again I'm taking almost a year time frame, came back down, provided pullback, sharp rejections at 61.8, in between 61.8 to 78.6%. And here if you see, downtrend is broken, it is creating new high. You can take entry here, or now it's like I'm expecting a little bit of pullback, not exactly to 300 levels, but some sort of pullback, create one low, then further move back up. And there is a high probability whoever is shorted here, market makers will try to flash out all their stop loss. Whoever shorted here, they book profit here, stop loss move to break even, flashing out stop, that is a high probability. So whoever has shorted here, they will, like market makers will try to flash their stop out and provide wild upside. And the good entry point could have been 61.8 and 78.6%. Okay. Uh, anything. Let's take Google. If you see this point, see here, where is the rejection? 61.8% level rejections. If you see this point, where is the rejections? Where is the rejections? 50% level. So this is the importance of Fibonacci levels. If it provide pullback here in this pullback, it provided these rejections in this pullback, it provided 51.8 50% level. Not necessarily exact, it will provide 61.8 retracement or 78.6. It could provide pullback towards 23.6, 38.2. But this all, my objective is to show you the importance of Fibonacci levels. If it comes to 61.8, 78.6, that is a crazy level. You can trust it provide pullback, bounce back, but if it is rejected at 50% level, that is also a good entry point. Okay. Now if it provides like this, now let's remove all this clear trailing set. Now if you take this one for small, see, came back down, rejected 61.8%, you can take an entry here or somewhere here. Sorry, got disconnected. Can you guys hear me?
Yeah.
Okay, it got reconnected. I don't know, not sure.
You might need to reshare your screen. I think we cannot see your screen.
Okay. Can you guys see now?
Yes.
Okay, so what I was talking about is not necessary that you will be using 1 or 1.5 years time frame to plot the Fibonacci levels. Now, let's say I am just considering small pullback. Let's say these pivot levels I'm just considering. Okay, this zone I'm considering. Plot a fib levels from here to here. See what will be the levels, and it might retrace. It provided pullback rejections here, but again came back down, but got rejected 61.8% level. But after that, it started providing good move. And again, not necessary, like if you enter it 61.8% level here, that doesn't mean that immediately it will start going up, or maybe if sometime it might come back and might retest. Happens many times. It might come back, retest, and provide some more pullback, consolidate here, and then provide good movement. Here also, if you see, let me plot that. Let's take any other chart. Amazon, Tesla, what is that? Wood, if you plot from here, if you plot from here, came back, rejected at 61.8%, again, not necessary that it will sharply move up. It might provide sort of pullback, come towards 50% level, create a lower, higher low, and rejected and move back up. It provided little bit pullback, 38.2% rejections, and then crazy upside. Okay, so that is how I use fib levels. There are many things to use as a fib level as a strategy. There are a lot of books like Golden Ratio written by Curl. It's there in Amazon. So she has derived a lot of strategy. I use sometimes, not frequently, that you can refer that book. But for today's discussions, I just wanted to show you how these, like what is the importance of the 61.8% and 78.6% level, so that we can utilize that to derive some entry and exit points.
So Sudipta, how do you pick how to draw the Fibonacci line, right? How do you pick your start point? How do you
That
pick
is what I
your
was talking. It's
last point?
better to use 1 year or 1.5 year if you are looking for better entry points for quite, like you want to hold for a long time and all, not scalping strategy. Here, if you see this pullback, came back towards the 78.8% level and clear rejections. And this one, if you refer this point, it's too far, like maybe more than 2 years. Okay, I don't want to refer that. It's 2007 16. I will not go so far. Okay, 2022, you can refer 2023. Okay, better to refer 2024. But since it is downtrend, what will be your like lower level? If you see this one, it's a lower level. You can plot easily from low to high, and you can easily plot this chart. But now, if you want to see how much retracement it can provide, you can use like this. You can use like this. Here, if it provides a retracement, for 144 will be a good support. If market provides good amount of retracement, but it might come down towards 61.8 or 78.6% level. Okay, like that
And
you
when you
can.
plot it, you just go vertical like that, huh?
Yeah, that is how.
Because I normally what I do is I just go slanting. I pick like if I go to a daily chart or something, I would pick like the top high and low for a month.
There are multiple
Then
ways to plot. Whatever I read from her book, I'm using that. Like from low to high, I will expect a retracement towards
uh
61.8 and 78.6%. And again, there is no particular one strategy that is working. There are
yeah,
multiple ways you can plot your strategy.
right. And what I normally understand from the 61.8 figure is it's a golden ratio, right?
Yeah,
So
exactly. Hmm.
everything in nature,
Yeah,
architecture,
yeah,
our
that is
face,
how
body,
Fibonacci. Google it
right?
out, you will come to know. All the numbers, Fibonacci numbers are there in nature. It's in human body as well.
Correct.
Just you refer Google, I mean YouTube video, you will come to know. We are not talking about that, but yes, it's there in the nature. Everything is in with ratio of these Fibonacci numbers.
But what
Okay,
I understand is if it breaks 61.8%, right, it can go to 1.61, it can go to 2.61.
that is
So,
extension. That is
right. So
extension.
the extension is
Okay.
possible too, right?
Yeah, why not? See, if you are plotting this as extension, you can see 61.8, 78, 100%, 123.6, 138. It's rejected at 168%. From here to here, it moved back up, clear
Right.
rejections. Okay, that is how. Oh, there are multiple things, and Fibonacci itself is a big topic. So if we start discussing, there will be really a lot of things. Okay, and we can like derive area of confluence. There is a high probability setup where it will come down, retrace, and it will bounce back from that. Again, there is a different strategy. We will not have so much of time to discuss, but you can refer. I will share that book. You refer that. She has explained nicely. In fact, I have learned from that book as well only.
Okay.
Okay. Uh,
Sudipta, one quick question. So, will you say that you use this for more of an entry
yeah,
position,
yeah.
or you
Entry
use
point.
it for okay,
Entry
okay.
point.
So what
Okay.
would be your entry point? You're saying when it's really below 61.8?
Sorry, tell me once again.
So go back to that graph. How it's so let's look at this setup. What point would you take an entry
Okay, so
point?
if you plot from here, if it is coming to 61.8%, the way I have mentioned for UNH, okay, let's talk about that.
UNH, okay.
UNH, we have mentioned, right? If you see our chat, a few times I mentioned,
Uh-huh.
if it's now near 61.8%. So any entry should be fair enough within this zone. If you're missing that, above that also, it's a good entry point right now. No point of entering right now.
Correct.
It's a
Correct.
rejections. There might be one more rally rejected, or might be rejected here, provide small pullback, and at least I will expect 50% retracement towards this level, and then 50% in the sense I'm looking for this.
But when you plot this, what was your base point?
Here the better entry point will be in this zone. That is why I
No.
highlighted in
Where did
green.
you start plotting where was your point zero?
Okay. 10 years chart, 15 years. Okay. Here you can plot. I have plotted from here maximum that is not required. You can easily use this one. Okay. You can easily use this one. Okay. It came back down below 78.6% level. Okay. And rejected. Okay. Little bit consolidations here. Red candle, buying is prohibited. Blue candle, you can take entry. If you can capture this, it's fair enough. If you are not able to capture, you can capture above 78.6% or exactly place order at 78.6%. That is also fair enough. Okay.
Mhm.
Okay, so we have 8 more minutes. I'm going to talk about option strategy, how I'm going to use this for option strategy. Okay. Um, Okay, so we are going to talk about three strategy today. Bull put spread, bull spread, iron condor, and how we can use all of these, whatever we discussed today, to construct trade. Okay. Let me this one. You see my screen, right?
Yes.
Okay. Okay. So first strategy. Now we are going to construct bull put spread. So bull put spread, what we do? Here, bull put spread is basically you are expecting price not to move in any directions, or we don't know which directions will move. So first thing. Second thing is we are not expecting wild downside. We are expecting price either will not move, or it might down little bit, or it move up. Okay, that is the objective of this strategy. That is called bull put spread. What we do, we will sell a put, buy further out of the money put with delta 0.1. 0.1 means if price move $1 with respect to delta options will move 10 cent. Okay, that is the objective of this trade. I will construct. Okay, here delta 10. Okay, so what we'll do, we'll buy, sorry, we'll sell vertical. Okay, what it will do, we'll sell a put here. Okay, buy further out of the money put 190, 185, 185 it's taking. I will go for 150. I will go for 150. Okay, sorry, my bad. 185, or let's say 160. Credit 1.18. Okay, so here if you if you see here one contract now, let's change to 10. Let's change to 10. Okay, here sorry.
Sudhita,
My bad.
how far do you go in terms of timeline?
Okay, yeah, timeline usually I prefer to go for 30 to 45 days. Okay, not below. You can look
Okay.
for weekly, but I don't trade.
Okay.
Here, so for one contract, max cost of the trade 117, buying power 2800, max loss 2800, max profit 118. Okay, so let's talk about that. I think already I have it here. Analyze trade. Yeah. Okay, so here I have taken 180 and 190. That's fine. Here credit, you can check it up where you will be getting a best credit. Accordingly, you can just construct your trade. So 33 days approximately, maybe October 10th or 11th, something. It will come up November, right? 31st October. So 31st October, 33 days. Okay. So analyze 33 days. Okay. So let's see October 31st. Let's say this one. Okay. From here, set slices, break even, October 30th. Okay. So what it does, 195 is your break-even point. I'm taking extreme point like October 30th. Okay, if it is 1 till 195, you will be at break-even, $44 profit. You see here, you will see purple color, $44 profit it will show. Okay, 44.70 or $44 profit you will be getting. If it is going above 200, if it is staying above 200, you will make a profit of $600. Okay, now come to chart. Amazon. This is Amazon weekly. Where is weekly? Monthly. Okay, so Amazon, let's say if it is staying above $200, there might be a possibility it might sell off. Okay, for example, and 200, 50% retracement. It's a lot. there is a high probability if it comes down, it may not go down so much. It might hold this level. Still, let's say if it is trading at 200 to 209, okay? In that case, what will be your scenario? 200 to 209. Analyze. Oh, here. Chart analyze. Okay, so if it is trading at 200 or 201, 200, still you will be making $585 profit. Here, if it is trading at 203, you will be making $611 profit. Okay, current price 219. I'm expecting price to go down. For example, I'm expecting price to go down to 209, 203. Still you will be closing the trade with green. Okay, if you buy a stock here, if it goes down, you will be losing money. Okay, so now analyze one more thing. Let's say again in this strategy, upside and downside is capped. Downside is limited, upside is limited. You will not make more than that. That is a bull put spread. Okay, if it is here, you see it's a flat line. That means if it is at 200 or 203, almost it will be same only. Not, it will not change much, but slightly. So you will still make money if it is still trading at 200, 203 by this time, October 31st. Okay, and you can like analyze in multiple ways. October 15th, what will be the strategy? If it is trading at 210, you will not make much money. The reason is this strategy specifically consumes premium from the theta time decay. As long as you hold till the expiry, you will consume more premium. Okay, if you hold, like if October 15th, if it is 225 and all, you will make this $530 profit. If October 30th or near, you will make maximum profit. If it is $200, still, if let's say now 230 came down to 200, still you will be closing the trade with $623 profit. Okay, that is one trade. Now second trade is, let's say you are expecting a bullish upside, Amazon. Okay, what will be your trade? Sell a put, buy a call with current price. What is the current price? 219, let's say 220. Buy a call. Okay, sell a put, buy a call. Then sell a put, buy further out of the money put. Okay, buy further out of the money put. Okay, what will be the risk factor? If you analyze, I actually constructed with different parameters, but the objective is buy a call, sell a put, buy further out of the money put. Okay, now what will be your risk parameter? And in this strategy, you will expect price to move much in few days, few weeks. You are not going to wait so much. Okay, if now current price Amazon 220, if it is moving to if it is moving to 238, 237, how much? $1,381 profit you will make with one contract. Okay, if it is moving to 140, you will make $1,698 profit just with one contract. If it is going down to 207, you will be losing $1,068. This is like 215, you will be losing $378. You will be losing so much if it is going down to 185, $2,961, $3,000 you will be losing. This is a wild strategy. Okay, if you are very much bullish on this, you just go for this strategy, and buying power also will be it will block less buying power. Okay, buying power is 8,500 just with one contract. 509 will be cost of trade, and max profit infinite. But for bull put spread, max profit and max upside and downside is capped. Here downside is capped, but upside is infinite. Okay, so that is how you can construct this trade. And there is a risk profile. So here it's a debit spread, this is a credit spread. If it is moving upside while, you will still make very good amount of profit, but you need to enter at certain level where downside will be limited. Like let's say if you are entering SPY where it has a clear rejections here, if you enter here, at least 2-3 points move also will provide you a very good return. Here also, if you enter here, it will provide you a good return, another entry point. Likewise, or if it is if you can find out these rejections, you can enter somewhere here, you can easily capture very good movement. Or if you don't know which directions it might go, then open a bull put spread, where if the prices stay here for a long time, still you will be closing the trade with green. With that opportunity you will not get if you buy a stock. Okay, and one contract 100 shares, if you buy 100 shares, it will cost you a lot, right? It will cost you a lot. But one contract hardly, it will cost you maybe $700-800 or even less. Okay, and that is one thing. And I want to talk about iron condor. Okay, so iron condor, what we do, um, so usually it's good to construct trade on futures. Okay, in futures, what happens? It tends to move sideways. Okay, if you open a trade here, bear call spread. Okay, and here bull put spread. Okay, you will collect the premium from both the trade. Most likely it will trade sideways for quite some time, and you will capture premium over time. So just open, and risk profile I'll show you, then it will be more easy here. If it stays within that range, you will make good amount of profit. If it goes above or below, you will be losing trade. Okay, here if you see in this one, you are opening a bear call spread. This is a call, and you are opening a bull put spread. Okay, sell a call, buy further out of the money call, sell a put, buy further out of the money put, which will construct iron condor. This is a bull put spread, this is a bear call spread. Add that iron condor. If it is trading within that range, you will make good amount of profit over certain time. If it is going outside the range, you will be losing. And most of the times these futures, it tries to tend sideways most of the time. So construct a trade where sell like sell a bear call spread here, buy a bull put spread here, and just wait for some time, and that's it. Actually, I'm trying to open this one, but I have some like account issue for future, so I'm just trying to get resolved, then I'll start trading it. So that is what for today's sessions. I am done. Let me stop the
So,
recording.
Dipta, you said like future tends to remain sideways. Any reasoning for that comment, like, or is that a historical thing?
Pause.